hours together. Unfortunately, we have a lot of people that will be talking, and we have very little time. From my end, my name is Benjamin Vöckersberger. I am an entrepreneur from Germany. I did different companies, mostly in the games and gaming range. And I'm very much involved also with the cryptocurrency world. And that's my touching point with fintech. So since maybe a few people are still at lunch, we hope that a few are dribbling in after time. And I would open up with a say hello session of everyone. Please introduce yourselves a bit to our audience, and let's hear what you guys are doing. Wherever you want to start, grab a microphone and go ahead. Does it work?
Hello. Can they hear this? Oh, perfect. Yeah, my name is Mike Lemberger. I'm with Visa. I am based out of London for our European offices, and I focus on our products and solutions and delivery across Europe, and working with many parts of the innovation space, many parts of the financial services space, and bringing together what a payment network can do to continue to kind of innovate and grow commerce across Europe.
Can you hear me? Oh, fantastic. My name is Nick. I'm the head of data at an Estonian-based startup called Funderbeam. We're the world's first platform where growth companies are funded and traded across borders, secured by the blockchain. And we've built our platform on 3 pillars. We like to say that if Bloomberg, NASDAQ, and AngelList had a baby, it would look a lot like Funderbeam. So we have a data intelligence platform where we've collected and aggregated data on startups all over the world. We've collected that data from as many sources as possible, cleaned it up, and then applied our own level of statistical analysis and machine learning on top of it to try and draw some insights out of that data. Then we have a syndicated crowdfunding platform where innovative and disruptive companies can come and raise funds from investors all over the world, which is traditionally something that's been quite difficult for companies to do in the past. And then we top that all off with a liquid secondary market secured by the blockchain, so that when you invest and you back these innovative companies, you receive digital tokens representing your stake, and then you can freely trade those tokens with other investors who may be interested in investing in that company. So you can get out of your investments early, and people who missed the primary round can come and they can get their share as well.
My name is... Work already? Yes? Yeah. Okay, thanks. My name is Mirel Ter Braak. I work for the Netherlands Authority for Financial Markets. We established our innovation hub in 2016 together with the Dutch Central Bank in order to enhance our understanding of what's going on, talk to a lot of parties, also crowdfunding platforms like Funderbeam, and we just want to establish this dialogue, learn from them, but also give some of our insights from the regulatory perspective, and also see how our organization needs to change in order to develop an adequate way to supervise the different financial enterprises that are under our supervision.
My name is Abdullah Kablan. I wear a number of hats. I'm a serial entrepreneur, founded a number of companies operating mainly in the fintech space, focusing on AI and machine learning. My companies are Hippodata, Shadewit, and Trigonomy. More recently, Hippodata was selected by Microsoft to be a part of Microsoft Ventures London. We got acquired by a major Singaporean VC, 6K, and at the moment we are based out of Malta, London, and Singapore. And I am also an academic at the University of Malta, lecturing algorithmic trading, computational intelligence, and financial trading. And I believe I'm in here in my capacity as a University of Malta academic. And thank you.
Hi, I'm Matthew from ZAR, a Malta-based crowdfunding platform. We were set up by the University of Malta and the Malta Business Bureau as a vehicle to improve the access to finance to local ideas, local entrepreneurship, and obviously as part of our dual role is one partners, obviously providing the crowdfunding platform services, as well as creating more awareness, a better understanding of crowdfunding in general, and promoting entrepreneurship in Malta.
And last, my name's Rodri Priest-Jones, or just Rod. I work for NASDAQ. NASDAQ's a financial company that owns exchanges, clearinghouses, and central security depositories. We provide technology to our customers, more than 50 customers in more than 100 countries, or other way around, more than 100 customers in 50 countries. Myself, I'm based in Stockholm. I head up development for trading, for market data, and for CSDs. And we're always looking into more fintech-related issues.
Sounds good. So we have a very diverse panel. So the first question regarding the up-and-coming fintech industry, in the last few years, this was growing very rapidly. The first question I would throw at you is, which kind of challenges did you have with your company or your regulatory body that emerged within those last few years that are touching the subjects with all of you guys, right? So it will be very similar things that we're talking about. Feel free.
One of the main challenges, in my opinion, as a founder of a fintech company is on the regulatory side, which is the lack of understanding from the regulator side of what exactly we're doing, which is quite understandable. I mean, the regulator's job is to look into the operations and try to regulate them, make sure that everything is up to a specific standard. The problem that we have in Europe, and I think in the western part of the world, is that the economy is very heavily entrenched, and we are also over-regulated, which quite impedes the innovation side of things. Now, being a part of a bigger entity that operates out of Asia, we're noticing that there is a huge difference in the regulatory structure. Just to give you an idea, one of what the products that we build at Hippodata is that we build data-agnostic behavioral AI, which is in a nutshell artificially intelligent bots that learn from the behavior of traders and mimic their behavior according to specific market conditions. Sounds very technical, but if we try to get our bots operating here, the regulator will ask so many questions that most of them are quite irrelevant to the actual technology that we're using and the operations. And it has to fall within one of three main categories, A, B, or C. Whilst in Asia, for example, if the regulator does not understand the product, they allow for what they call sandboxing. So I'll have a sandbox where you can test your product, it will be monitored, it will be up to standard, and you will have to continuously generate reports to show what you're doing. But it allows for flexibility and it allows for the improvement of the product, something which, again, as an entrepreneur, would love to see here in Europe. So a major challenge that we have is on the regulatory side. The other challenges that I see in Europe mainly is investing in these technologies. Mainly the investor is wary because they know that there's a very tedious regulatory process, so it does go back to regulation, in my opinion. We need to have a regulatory framework that is a little bit more updated, at least locally here. In Malta, I can speak for the Malta regulatory system. We have a fantastic regulatory system when it comes to traditional financial services, but when it comes to innovative fintech products that are technology-driven, then we find that there's a huge gap that does impede us from operating and innovating.
I have to second that one of the biggest challenges that we're currently facing as a fintech startup is indeed centered around the regulation. And I would argue that part of the problem is that regulation has traditionally been retroactive. So what we're seeing with all these new technologies being developed and coming out, and innovative companies building their services on top of them, is the companies will spend a lot of time and resource building this product and building this service. And then they go to the regulator once they have something up and running. And that's when the regulator tells them, you need to change this, this, and that, and then you have a product that you can take to the market and we're willing to license. So I think I would highlight the point that the regulatory bodies need to do a better job of establishing frameworks that allow them to adopt new and emerging technologies, because we're currently at the point in humanity that we're developing technology at the slowest we're ever going to develop it again. So in 5 years or 10 years, we don't know what the new blockchain is going to be. So by the time regulators have adopted frameworks that accept platforms built on blockchain and cryptocurrencies, we're going to have something else entirely new, and we're going to have to start from scratch. So I would say that the frameworks need to be built in a flexible manner that allows companies to build their platform on these innovative technologies while working directly with the regulators. So in something along the lines of a sandbox environment, rather than building these products, then going to the regulators and being told what it is that they have to change.
Maybe Muriel, if you want to tell us how you are tackling that in the Netherlands. Are you already using something like a sandboxing approach? Are you trying to set this up? You're next.
Yes, let's first talk about our innovation hub I just mentioned in my introduction. And what I heard from the startups here is that it's important to engage with the regulator in a very early stage, because if you develop something and then go to the regulator, you might be a bit late because you have to go through some changes. And let's go also a bit back to why regulation is in place right now, because you guys are doing some very important things on financial markets. And we have had some kind of crisis, and also we find it very important that there are some rules that we understand what we are doing with one another and how we have to deal with certain transactions. What we hear back from the financial companies we talk about, whether they are startups or just incumbent players, because there are also quite a lot of incumbent players doing interesting stuff with blockchain or AI or machine learning, whatever you like to call it. I'm not getting into the details of these things at the moment, but what we hear is that it's just very important that the regulator takes some steps and go to establish this dialogue with these parties, and if it's needed, also it takes the time to take some extra time to go through what these type of parties are actually doing. Within our fintech team, my background is a lawyer, but perhaps my other colleagues should be here because they have a technical background, and that's also quite important in order to understand these new techniques. What we try to do in the team is just go to the essence of what the technology does, and then also look at the essence of the regulatory framework, and then try to bridge these things. So if someone performs a certain function that is not regulated by the financial services industry, well, it's fine, you can just go ahead. But if the essence of the thing that is developed falls under legislation, then we'll have to see what type of rules apply in a proportionate way, of course. And if the technique is that disruptive and that different from things that are regulated right now, we have a sandbox in place. And we again go back to the principles of the laws, like for instance consumer protection or investor protection, and then ask the financial enterprise, how do you protect these kind of interests, which we all find very important.
Okay.
Sorry, so just to chime in on the same topic there, I think there's a consultation paper that's out at the moment, and along these lines, the comments that have been coming from NASDAQ have been very much, we'd like to see a sandbox approach as per the UK FCA or the CFTC in the US. So maybe expanding upon this blockchain laboratory that's being discussed at the moment. Again, following the comment from Nick, we'd like to see the sort of regulatory framework remain technology agnostic, because while there's a lot of discussions about hashtag fintech now, this isn't something that's actually going to end. Things are going to accelerate, and it's been a wave we've all been working with for many, many years. And then I guess the last thing we'd very much like to see from ESMA themselves some guidance with regards to cloud outsourcing. So there seems to be a battle that many people are facing, and that really would help drive some of the innovation work if you get access to a cloud service where you can get your implementation up and running in days, and then if it's not working out, close it in days.
Just to sort of change a bit the angle, obviously the regulation and having a legal structure, legal framework that allows you to operate is fundamental, and it's a massive barrier at this point. For example, us, we can't operate an equity or lending basis as yet. Apart from the regulation being in place, as mentioned before, it's important that the approach of regulation is adjusted in a way that reflects how things move on so fast. So possibly a change in the approach of how the regulators look at these technologies and go back to the essence and say, why do regulations exist? Which mainly, in my opinion, the fundamental question is consumer protection or investor protection if we're dealing with fintech. So maybe having a set of guidance, code of conduct, and guiding principles that would apply to in general rule, and then different implementations, be it whatever technology is used, keeps as long as it's catering for those principles, sort of gets a fast track or is closer to home. The other thing possibly is looking at regulation more of a modular approach, where you do not need to apply for a license that allows you to carry out a vast array of services, because possibly traditionally that's how it was, like a bank applies for a bank license and does a whole array of services, while in fintech we're seeing companies, small enterprises as well as large, targeting a focal point, and they go in and out of one particular function. They're focusing on simplifying and improving one particular sector. So they might not need a fully fledged license, but they need just a module of it to be able to start operating and prove themselves.
Yeah, I think one of the main topics for you guys in the smaller ranges is definitely that the regulation has to follow up quickly once you develop something. And I think the sandboxing approach is one of them, but another one would also be to educate their regulatory body more, so they can understand what they're doing and they're not scared of the whole new systems that are coming up to them. So that would be one other point. You wanna?
Yeah, just to make a comment on that as well. I think, you know, if we think about the responsibility across a company like Visa, who is already, you know, interconnected through many parts of the financial system and certainly within the payment system, into, you know, regulation will come because of actions that sometimes happen. How do we self-police? How do we set up and take principles and guidelines? And as Visa, you know, part of what we've done over the last 5 years is actually open up our network, allow and create sandboxes and developer platforms for fintechs to come in. We need to do a better job of inviting more people in to practice and look at that. We feel like we're a leader in the world in securing data and information, and so how can we teach some of those practices that then gets taken on, so regulation doesn't need to be applied to it because it follows some of the same guidelines, interoperability that we've set up. So you know, we continue to kind of strive to play a bigger role in that and really kind of help out within the networks. Of course, you know, our entire business is built on kind of free data movement across borders and having that ability. So.
Okay. Yeah, so I would like to move to the next part of the panel, which would be about the future of fintech. What are the next substantial changes that we see? What are the next things that are coming up?
I think looking at the future, one of the things or the many things that we could highlight here is the actual consumer and the change in consumer behavior due to the change in technologies. For example, taking the banking industry has always been built on three main pillars: deposits, transfers, and loans. Nowadays, you can go and deposit money using your PayPal, you can transfer money using TransferWise, and go to a peer-to-peer lending platform and get a loan out of that. And because of that, people or consumers are realizing that even though they need banking, they do not necessarily need things like banks. They can actually just go to a specific product or specific app and get the same service. And with that, we have the new type of consumer, which is millennials, which is a specific type of users that are used to a type of products that is faster, more agile, and satisfies their urge to get instant gratification for whatever service they're trying to get. I mean, recently I was reading this survey by the Millennial Institute, and it said more than 73% of millennials are much more excited about a financial product being launched by Google or Apple than the same product being launched by their own bank. A more recent statistic showed that 75% of millennials would rather go to the dentist than sit with their human financial advisor. which says a lot about the way they're consuming the products. So things or new products such as advisory will move to robo-advisory. Things such as deposits or transfers will move to other platforms. Facebook, for example, has just acquired 50 licenses to transfer money on your Facebook Messenger. Amazon now just got licensed to give student loans to students. So these big tech giants are actually moving towards a market that they haven't tapped into before. And they have the right technology to do it, and they have the user base that believes in them as product providers or as service providers. And this will, in a way, change the entire landscape of the financial industry, and we will become actually technology-led. If you look at the financial industry, for almost 2,000 years, since the very first ever recorded financial instrument in olden day Sumeria, modern day Iraq, which was a grain contract, until almost the financial crisis, innovation within the financial industry has always happened, from within. We live in a time now where, due to the crisis, the institutions had other mess to deal with than to innovate on their legacy models, and we had tech leaders that have moved on these same propositions that they're offering. So the gap has widened to an extent whereby the traditional financial institution cannot keep up with the type of consumer, with the opportunities, and with the challenges that we've mentioned. So this, in my opinion, will make a drastic change, and the products have to be consumer-led or consumer-based, or looking at the consumer behavior and what they need, and speaking back or taking it back to the regulator. The regulator has to understand that the type of consumer itself has completely changed. So they have to create a framework that actually goes in line with what the consumer wants.
Yeah, I think just to add to that, consumers are going to be the center of a lot of this, and I think a lot of the fintech tools that are going to come out are going to have things around consumer confidence. As we know, people can get scared off with things. You hear breaches, you hear information getting stolen, compromised, fraud. Those components are in the system. I think that as fintech grows, the companies that are going to be able to adopt the technology to be able to make sure that there still is that consumer confidence around that. I think that authentication hubs are going to be a big part of the future of fintech, and how and what we're going to be, in a sense, policing ourselves, but making sure that there's both public and private ability to authenticate, make sure that there's security around that, and that we can tap into those things. And as an industry, we'll connect the traditional financial institutions, the tech financial institutions, where consumers want to go. Because there will always be, I think, a large swath of how people want to interact, and consumer confidence will be a big part of that.
So just to continue with the future of fintech, there really are truly exciting times coming. If you look at the cost of storing data is such now, we don't have to compress the data. We can store all the data we have. If we look at the cloud computing, we have vast capabilities. So you combine those two, and it leads to things that will be around machine intelligence, like the robo-advisors you're talking about, and some of the products we'll be looking to sell to our customers around, this is what's happening in the market. This is what you can anticipate happening. So you can start selling more and more products on a fact-based percentage. But because you have this, the increased amount of compute power, and that's not just from the actual cloud computing, but even if you look at quantum machines that are coming as well, the sort of the possibilities are really only limited by our imagination. Obviously, we have to tie it into our existing infrastructure, but the future is just fantastic. And yes, I am an optimist, but I really am absolutely enthralled by what the future is going to bring.
I think so far the panel has done a good job of covering how financial services would change and how they would have to be more consumer-oriented. But I think also capital markets are going to follow suit. Because in any capital market situation, you have two groups of people. You have people who have money, and you have people who need money. And historically, the people who have the money have been angel investors, large VCs, whose primary objective when it comes to investing is making a return on their investment. But lately, what we've seen with the emergence of crowdfunding, and this started with reward-based crowdfunding platforms like Kickstarter, but have evolved into more complex platforms like Funderbeam and Seedrs and Crowdcube, is that you're actually generating interest amongst the general population, whose primary interest might not be making a return on their investment, but actually putting money into companies that they believe in. So what we'll see in the capital market situations isn't just companies that are well networked getting funding, but the companies that can generate the most interest from average people who believe in the company and aren't necessarily concerned with making $1 million on their investment, but just want to invest in someone they see as having a positive influence on society, a positive influence on the development of technology, or anything along those lines. And it'll even see an impact on stock exchanges and as well, because now there are several platforms, Funderbeam included, that have introduced this liquidity to private investment, and now Seedrs and Crowdcube have done something similar. So I think over the next few years, we'll see that just average people who are backing companies they believe in without having a particular concern about making a massive return on their investment will influence which companies are successful in the future.
I obviously do agree with sort of most things mentioned by the panel in terms of the future. I think an important aspect will be the combination of existing technology with the newer technology that emerges from artificial intelligence, data analysis. The development will be so huge when we start collecting more and more data from the fintech activity, from activity recorded related to financial transactions on other platforms. Let's say when we start transacting on Facebook. The behavior of people will obviously change. So in line with what was mentioned here, not only did the technology change, but as I mentioned, people are and more companies are looking into slices of the whole financial services. But also the target audience is changing, going more into the general public, as mentioned, but also I think we'll also see eventually a shift towards younger generations, the youth, and starting to engage them in technology, dealing with financial transactions and fintech at a younger age, including educational apps that will start off the whole notion of investment, of equity finance, of dealing with money in an online world throughout your day-to-day dealings with other people. I think that will also start getting into the picture more and more.
Yeah. I would like to raise one more question regarding the new developments that happen within the cryptocurrency and ICO world. I think that most of us have already heard of Bitcoin, which has been around for a few years now. But with Bitcoin and Ethereum up and coming, there have been other tokens which developed a certain relevance within the market. So people decided to come up with a concept. They called it a white paper. And then they would just publish it online and say, now we do an ICO, which is an initial coin offering. It's very similar to what happens at NASDAQ. So it's like an IPO. But an IPO company has been around for a while, and they have a product and a concept there. And what's happening within the ICO world is the same thing, but it's very unregulated. And I wanted to hear your opinion on that, since on ICOs there is no regulation at all. Most people don't even know. It's definitely a way younger generation that's putting their money into. And with those ICOs, there are billions of dollars created in worth, in net worth in people that now can be investors in something like that.
I think there needs to be a distinction between two things here when it comes to cryptocurrencies. One is the cryptocurrencies themselves, things like Bitcoin and Ether, but the other is the underlying technology, the distributed ledgers like the blockchain. And I think it's really the blockchain that's powering these sort of activities. And the reason they're doing that is blockchain brings an element that has traditionally been locked behind being a licensed and regulated company. And that element is the element of trust. This is the reason that financial services companies go and become licensed, is so that they can show the world that they are a trustworthy business partner. And then they have more flexibility in how they operate in other markets. But when you bring the power of distributed ledgers into the mix, you can almost replace this centralized oversight that brings the element of trust and bring that then to technology to bring that verification for you.
Yeah, sure. I actually agree with you on the underlying technology that's part of that. I think that moving of money, if we can create better and faster and more efficient ways to move money around, it's good for the economy. It's good for that. If you think about the ledger component of this, if you're placing the onus on the people who are partaking in it, and as long as they understand the protocols, and whether it's a white paper that creates it or something that even is sponsored by a government, in a sense that's to take out some of the process that's there, some of the things that actually makes it more encumbering to make those transfers or to move that or for somebody to invest in something. That's where we're going to see that the technology goes. I think from a pure currency perspective, I think it's still too early to tell, but really from an ability to move and trust of the movement of money around, back to your 2,000 or 3,000 years of where things are, there were levels of trust that were there, and we should be continuing to get those stronger and stronger so that we don't have financial crises and other things. If we can keep a ledger of things, we'll have a better eye on where things are at. And in a certain sense is that government should start to embrace the thought that it is a public ledger for what's there. And if we still need to figure out ways to make sure that there are components around tax and other things that are part of the system, let's do that together and figure that out. Let's not try and put the technology down itself.
In fact, I think you've covered more or less what I want to say, and in the risk of sounding like a historian, I'm not a historian, I'm a technologist, but throughout history, for any economic transaction to take place, there had to be an element of trust, which has to be emphasized. In the olden days, this trust had to happen through social norms, religion, law, violence, whatever it is. We moved to the age of e-commerce and started trusting big giants, Amazon, again as an example. But now with blockchain, we have a technology that is enabling this trust. And once you enable that trust, you're actually enabling more opportunities for economic exchange. And that is quite powerful as a concept, because I always love to use the example of, or the drawing a similarity between the internet and blockchain. Internet existed as a protocol for almost 30 years, TCP/IP. Nothing much has happened until early 90s. One invention took place, or one innovation took place that catapulted the internet to a completely different level, and that was the browser. The same thing is happening with blockchain. The browser moment for blockchain, even though blockchain has been around since 2008, 2009, is the creation of blockchain-based marketplaces where we can transact digital and physical assets, and we can have asset-backed currencies that are listed on a blockchain market where we can trust the contract that is enabled by technology. So it's all moving back from a system of where in God we trust to in technology we trust. And this will enable a lot of business opportunities, but at the same time, there are some security measures that have to be taken in place, like my fellow panelist has mentioned earlier.
Just one thing on the technique itself, on the DLT technique. Most of the things we see as a regulator in the Netherlands most of the concepts are permission-based DLT frameworks. So there still is a central party giving you the admission to enter the blockchain. That's on the DLT side and about trust. So it's still hard to rule out a sort of central party, but perhaps some of the other panelists have other experiences about that. On the currencies, it's very interesting to see what's happening, and it's too early to tell where it goes, as some of the other panelists have said already. But I think it's very important for the regulatory community to closely monitor what is happening. In the Netherlands, a digital currency or cryptocurrency in itself is not regulated. What we see via our hub is that there are quite some new companies that want to set up alternative investment funds in order to make some kind of speculation or trading in these cryptocurrencies possible. And then also the ICOs, which are relatively new, or it's a bit of a new trend since the past months. It's growing. We also have to follow that more closely, and as a local, I see us as a local regulatory or supervisor. I think we do not need to give a sort of regulatory interpretation on our own. I think we have to work very closely with the European Commission and also look at other bodies, like for instance the Financial Stability Board on a global level, because these developments have an impact globally.
Absolutely.
So just to follow on from my historian friend with the reference to how cryptocurrencies have moved on, I'd almost argue that where we are today is maybe on the Netscape front, if we were going to compare where Bitcoin is, and then sort of maybe Firefox or the next generation is coming, because there are some limitations in as much as that there's a certain throughput limitation, maybe 10 transactions a second. There's a block created every 10 minutes, and those blocks are generally speaking validated in one specific country. That's where 80% of the compute power is today. So again, it's a fantastic thing that's been created, but it isn't the end game yet. There's still things to be done. So I mean, without wishing to be too partisan, I mean, we've actually created a blockchain setup where we take private listed companies and we actually connected it to Citi, as in the bank Citi, so we can actually have payments coming out of it, and that's essentially their form of Citi coins, for want of a better term.
Yeah, so I think we scratched a lot of surface today, and we don't have too much time, unfortunately, to keep going further.
I was just going to use an analogy. I mean, and certainly this is Visa's business, but if you think about an authorization that happens across Visa's network around the globe happens in a sub-second period of time, and that's connecting financial institutions to make sure funds are available. If you think about for capital, moving of capital money, that doesn't require sub-second time to authorize things. To your point, I think, around the fact that we have a few generations to go to get the blockchains and the ledgers to the point where in an everyday environment, we're thinking about that type of currency to move things around. We need to have and continue to build. So if the future of fintech is a little bit in, we've got a good challenge in front of us to take it there.
Absolutely, and I think those challenges are, on the one hand, on the technical side, but also we have to find a way to find regulations to protect investors and the people that are using it out there that have no clue what they're doing so far. And I hope that the regulatory body and the EU Commission will take a look at it and check it out. I think for the last 5 minutes, if we have any questions from the audience, that would be great. So you will receive a microphone. This gentleman in the middle over there. The first.
Hi, I'm Etienne Goffin. I'm economist for Needle Strategy. I have 2 questions. The first one is on incumbent banks. We talk a lot about fintechs, but not a lot about the traditional banks. And the financial crisis has weakened them. Then stricter regulation have been imposed on them following the financial crisis. In addition, low interest rates put extra pressure on them. So they need to streamline their operation and to be more profitable. From this point of view, fintech is a good, fintech technology is a good thing for them to streamline their operation. But from a financial stability point of view, it's a huge risk, because if those competitors enter the market and wipe them out, then large banks, which are too big to fail, it's an issue. And that could be a reason why regulators are so cautious and the regulation is so heavy and difficult for new entrants, new fintechs to enter the market. So I can understand the request of fintechs to ask for more, but is it something you consider, the point of view of banks? And I would ask the person from Visa to reply to this question. And the other question, which is shorter, it's about paying with data. The European Commission introduced this new concept of paying with data. Do you think it will change our understanding of the financial markets? And I would ask this question to the regulator of Netherlands. Maybe she knows more about that. Thank you.
Yeah, sure. I mean, in answering the first question, obviously we closely partner with many financial institutions, a lot of the large financial institutions across Europe, and even the small financial institutions that are there. I think they're certainly seeing the pressures. They look at the latest payment directive that came out, PSD2, and are thinking about it's requiring them to open up their platforms, both the data part of it and for the payment side of it. And those are things that are going to be challenges. But that challenge is kind of put forth to help stimulate more competition, more fintech competition within the market. And what I found in my time in talking to many of them, and I have spent a lot of time, is the ones that are going to be successful are going to step up to the challenge and say, we need to then play within this space. We need to become fintech players ourselves. And we're starting to see, and you have already started to see, a lot more incubation coming out of the financial institution areas, wanting to work a lot more with startups, getting more into the venture-backed components of this. And I think that is something that they're seeing that they need to change. Do they do it fast enough? Are they nimble enough to do that? I think time will tell. I think Visa's role in this is to try and help. And as a technology company that we are, we continue to open up innovation centers to help them understand how the connection points set within the business. But I think your points are very valid. I think that but it does set out for the banks that may be too big to fail. There may be a few that do fail, but we'll have enough that are actually embracing this that we'll be able to keep a stable economy.
I'm very sorry, but I didn't really, I'm not sure if I got your question right. So perhaps, or I can take it.
Yeah.
My question was about the fact that the Commission is introducing the concept that data can be used to pay services. And for instance, if you use Facebook, you provide them data, it's free, and you give them this data, it's how you are considered to have paid the services by providing data. And they will try to put a legal framework around that concept of paying with data. And but this changed everything, because if you can pay with data, then data has an official value, then you can trade your data, then you would have a financial market for data, then you would, for instance, data would be official means of payments, and it changed all our understanding of what payment is, what the data is, what currency is, what value is, and that's the question.
I understand. I wasn't aware of this concept. I'm aware of that data is absolutely really valuable. So I can imagine that companies already want to pay for it, and you see it in certain concepts coming by that companies want to pay for data. I think we have to be very careful about the debate. As a regulator, we look into data and the protection of it. Of course, there's a different authority within probably each country, separate from the financial authorities, that look into personal data and the worth of it and how it should be protected. I think we should be aware of the chances or the possibilities, capabilities it gives people to buy goods or do certain things on the internet. But I think we all should also be aware about the negative effects of it and the perverse effects that might go out of it. And especially we're, for instance, looking at insurance and all the negative effect data can have around these kind of concept and the solidarity concept and so on. So we have to be careful with these kind of proposals.
Go ahead.
If I may very quickly just answer or join in answering my colleague here in the first question, and regarding the traditional banks. And I might sound a little bit radical in my thinking, but I'm one of those firm believers that believe that in the next 15 to 20 years, probably half of the world's banks are going to disappear or are going to have to disappear. They're built on legacy models that are almost impossible to change, almost impossible to update, and it's just a natural evolution for any system to become obsolete at one point when superior technology takes over. Think Kodak when digital cameras came out, think Nokia when they didn't want to upgrade to Android. However, I also believe that the other half of the surviving banks or the forward-thinking banks are the ones which will have to update their entire business model and to learn a little bit from what happened in the music industry, for example, and become more of a financial app store which will host all these different innovative applications that are coming out from the fintech space. And as my colleague said here, with PSD2 now, banks will have to open up their data, and these apps will be able to access them, because at the end of the day, the banks will always have the two most valuable assets, the data and the clients. But what they'll have to do, or what they will have to look into, is to just turn their entire business model upside down and to become maybe an iTunes for the financial industry rather than to become just the service provider. And that's my belief.
Okay. So I'm looking at the organizer. Do we take one more question, or do we want to? Yes. Okay. So the gentleman over there. And then I think that's the last question. After that one, we should go to the coffee break.
Thank you very much. My name is Patrick Young. Actually, I'm not going to give you a question, I'm going to give you a comment. And I think the thing that's interesting about this, having been in the world of, well, financial technology since the early 1990s and writing a book about it in 1999, we've really actually seen in some ways absolutely no progress whatsoever during the course of this panel, because we had exactly the same major topics coming up 20, 25 years ago. We discussed brands. At that point in time, there was a fledgling stock market that had just occurred. It was called NASDAQ. It was built out of the NASD, and it went on to conquer a huge amount of the world. We were seeing the discussion that Microsoft, people may remember, it was a remarkably important technology company once, still powers a lot of the European Union, but that's a side issue. And, you know, that was something that people thought was going to get into banking, and that was terribly important. Cryptocurrencies were something that were being discussed at that point in time. Now, having said that, there are a number of issues which have actually changed what's gone on during the course of that time. The rise of the distributed ledger certainly changes something, and Rodri's absolutely spot on when he talks about it, because effectively what it is it's a Model T Ford variant on what we're going to see in the future, and therefore it doesn't actually ultimately solve the problems that incredibly fast-moving markets need. But on the other hand, it's really, really useful for somebody like Nick, who's genuinely innovating something that's a fabulously new financial product in the world. And I think Abdallah hits on a very interesting point, because indeed we've reached the 500-year cycle peak of the banks. We knew it was going to happen 20 years ago. We didn't know what was going to drive it. Ultimately, it was their own suicidal incompetence in alliance with the political regulatory complex which did it. But then that brings us back to the same problem, which is 20 years ago the door was closed to regulators. They didn't want to talk about financial technology. Nowadays they kind of want to talk about it, but their actual overarching desire is to know how they can write more regulation for it. And what I think is quite staggering about the conversation today, and I think is a bit of a disappointment, is that nobody's even mentioned something like MiFID II, which is an overarchingly destructive piece of regulation which is making Europe much, much less competitive in every possible vestige across the market. And actually what we're going to have to see is not merely regulatory competition, but we're going to actually have to see some sort of, in essence, of deregulatory forces moving forward. And ultimately that's going to have to be something which compresses and crushes the overall legacy lobbyists of the industry, because the problem we have here is that the things like the European Union are built on a lobbying network of banks, which are seen as being the financial industry, which is very much a passé prospect. And therefore the future of financial services and the future of financial technology and fintech per se is based on a much, much more radical paradigm, which is being driven forward by the likes of Abdullah, by the likes of Nick, and indeed also by the likes of Rodri, because that's fundamentally where we're going to go. But it's very interesting, because in many ways the conversation today is plus ça change, plus c'est la même chose. Thank you.
So my suggestion is that we actually invite you for the panel next time. That would be a very interesting debate. And do you want to conclude with something on the MiFID? Do you want to go there, or no?
I don't have the eloquence of Patrick, but it is dreadfully painful, to be perfectly honest, and the end result is far from clear as into what purpose it's serving. But that's my opinion, and possibly Patrick's as well. It's just horrible. Anyway, sorry, maybe I should allow the victory to finish.
No, so I think we're good. I think that also from the regulatory standpoint, I mean, I as an entrepreneur would say that they always should move faster, but they try to move as fast as they can. And then I think we have to find a common ground in the middle. Sometimes it's not possible to understand all the new technologies that are coming up within months or weeks. So for them, it's also a very hard job to be there. Guys, I would say thank you for being here, and thank you for contributing. And we all will go for a short coffee break. We meet back again at 14:45, so in around about 20 minutes, and then we continue with the next panel, which is all about digital opportunities in Europe. Good job.
Thank you very much.
There you go.
You did a great job.
I have to like turn that off, otherwise I'm so loud. How do I do that? Great. So, yeah, welcome back, everyone. I think I don't need to do any more introduction on my end. Let's jump back onto the next panel. Now we have even more people to talk about Europe, a land of digital opportunities. That's the name of the panel. And we will cover a lot of different topics from the single market strategy onto really what do we think and what does the panel think are the opportunities that Europe provide us for startups and scale-ups. So if you want to start, Jonas, with the introduction, and then you guys go ahead. Yeah.
Seems to be on. Hi, I'm Jonas. Together with my colleagues, we are a startup based out of Malta. We're a socially conscious business combining video games and philanthropy by turning time that people spend playing games into actual support for good causes. And we're here in Malta in part because of all these EU strategies and everything else. We were 6 people living in various countries, and we were all able to come here together and start the company instead of a virtual organization.
Hello, I think there's more of us up here than there is in the audience, so this is going to be fun. My name is Linda Griffin. I run global public policy at King. King is one of the largest mobile gaming companies in the world, and it was started across Europe from day one. So we were founded in Stockholm and London, and we're across Barcelona, Berlin, and a couple of other places as well. So obviously mobile gaming is one of the areas of actually the digital economy where Europe's a real leader. But my kind of second hat that I'm wearing today, chair of something called the European Tech Alliance. Quite simply, the Alliance is not a trade body. We are kind of based out of Brussels. We are essentially an attempt to gather the startups, not the startups, but the scale-ups that we're seeing in the tech world across Europe and combine our resources so we can get a bit more involved in the policy-making process.
Hi there, everyone. My name is Enrico Bellini, and I work at Google, where I cover public policy for Italy and Malta. Our team is the team that, of course, deals with governments and all the regulatory files, but also a huge part of our job is covering all the activities that we do to demonstrate the impact, the positive impact that has the digital and our company towards the entire Europe. In my case, focusing especially on Italy and Malta. Therefore, there are a lot of best practices that I hope that I will be able to share with you about how the digital can be a really an engine of opportunities for European businesses and including startups.
Okay, so there's government sitting next to you, the government of Malta. So I'm Alex Borg. I come from MITA, Malta Information Technology Agency. Our core remit is to provide ICT projects and services to government. But a couple of years ago, we've embarked on an ambitious project, a very interesting and exciting project, essentially that of designing and implementing Malta's first accelerator program. It's now running into its second edition. We've funded around 20 startups to date. We focus on early stage, and we're very keen to, to continue with the program and perhaps even scale it up. So some of you may have noticed as well that startups are now very high on the agenda in Malta, though it is a relatively recent phenomenon, basically, around 2 years. So now we have to start moving out of the activation phase and then into a more globalized phase.
Hi, I'm David Vella. I'm a co-founder of a Maltese startup called Dortoro Software, which started in 2009. It's a totally bootstrapped company. We develop IT infrastructure software for SMBs worldwide. I mean, 0.5% of our business is in Malta. We have 30% of the business in the US and the rest in mostly Western and Central Europe. Our two core competencies are technology and marketing. I'm here because I thought maybe we can share some of the experiences as a pure Maltese startup of some of the challenges maybe we had and opportunities which we think we have in Malta as well.
Thank you. Good afternoon. My name is Damir Filipovic. I work for Digital Europe, which is a trade association in Brussels for digital industries. We have about 60 corporate members, which basically comprises of all, we could say, well-known household names, including Google, IBM, Cisco, HP, and many others, plus 37 national trade associations across Europe, which actually links us with, of course, a lot of SMEs and startups. And unfortunately, I cannot share that I'm doing much more than being a lobbyist in Brussels, when compared to other colleagues that seems to do much more exciting stuff. But at least I will try to provide a perspective of the combination of bigger and smaller companies in Europe related to the digital policies. Thank you.
Hello, good afternoon. My name is Tony Bosch, and I work at Prismian. Prismian is a cable company, a multinational based in Milan, in Italy. And we are the largest manufacturer of fiber optic and fiber optic cables in Europe, and one of the largest at worldwide level. And I'm managing the telecom business for the telecom operators at worldwide level. I'm providing mainly fiber-based solutions or future-proof solutions for the network or the connectivity. I'm also a member of the Fiber to the Home Council as a board member.
Hi there, Julie Meyer, based in Malta now, also with offices in London. Two things. Entrepreneur Country is one of our businesses. It's a community of 300,000 early adopters. Some of you are on our Entrepreneur Country TV broadcast channel list and receive that. We broadcast out of Malta. The point of Entrepreneur Country is to create these new digital blueprints. Things are like in digital identity, citizenship as an application, and so forth, and to test pilot that in Malta on behalf of large companies that need to get to the future and build digital revenues, but also on behalf of the startups, the Digital Davids as well as the Goliaths. The Digital Davids are trying to assess product market fit, and we think that the United Nations hotspot that Malta is, the social media obsession is a really good place to do that. That whole platform, Entrepreneur Country, is a layer to the EcoSquared investment platform that we're taking to market, again using Malta as a jurisdiction from which we can invest across the continent. What the EcoSquared investment platform is doing is a multi-manager platform, very similar to what happens in hedge funds, private equity. And so we're kind of taking the venture capital industry out of the cottage industry that it's been, a lot of small partnerships, subscale, into a much more mature platform economics approach where large asset allocators, whether they're pensions funds, sovereign wealth funds, family offices, that want to invest but need to write a ticket of, say, 1 to 200 million, because maybe they're Heidi at Danske Pensions managing 50 billion, and so unless they can write a ticket of 200 million, they can't actually participate in venture capital. So our EcoSquared investment platform is working on behalf of those large asset allocators, interpreting the requirements then to the fund managers who are across the continent, who may know where the best entrepreneurs are in Prague or Norway, et cetera. And all of that will bring scale and better access to capital for Europe's technology entrepreneurs.
Okay, thank you. So the first topic we want to talk about on the panel today is the single market strategy. There was the midterm review just recently. And we learned a lot about this, how it changed and what it changed Europe. One of the things that I really like, since I travel a lot and I'm from a small business, so my roaming fees were always really high. And now I got rid of these. Thank you, Commission. That's really good. And I think everybody partied yesterday that it happened. So, and I think that Tony might give us a short explanation on how it touches with your business. And then I'm sure that Damir and Linda might have some controversial views on that.
Yes, thank you. In our company, we are very focused inside the single digital single market on the connectivity package. That the targets of the digital agenda have been revisited or changed for the 2025. And probably just to recall you, the targets at connectivity level are 1 gig for the, let's say, the social economic agents, 100 megs for all the population, and to have the 5G coverage for all the big cities or metropolitan areas across Europe, plus the main transport corridors. I think that these are quite ambitious targets, but we think or we believe that it should go a little bit farther in the sense that to put the right grounding for the startups, for the new opportunities, for instance. It is not mentioned that the 1 gig connection, for instance, should be probably symmetrical, because most of these gaming or startup companies, they need even sometimes more upstream than downstream. This is something it's not clear enough or not too well stated in these recommendations of the digital package. Another one that for us is not clear enough and we should push forward, for instance, is the latency. We have heard also in the panel before that is very critical, the time response in the network for the transactions or the financial transactions, not only for the financial transaction, also for the online gaming. So I think here we should go one step further in defining latency and, of course, reliability on the network. And in this sense, we're pushing fiber-based solutions because we believe they are the more future-proof and are supporting these this type of new companies or startups.
I would add to this connectivity part 2 more elements, but just to go back to this, of course, we should also not forget, like Tony mentioned, 5G, which is a great concept. Commission is all about this. The only thing is, if you see how developments are in the discussions between the member states on a spectrum, which is actually prerequisite, you can say that the spectrum is like, kind of a land on which you build actually, land plot on which you build your house. So if this land plot is not properly coordinated among the member states, you will not have coordinated introduction of the 5G in Europe. And the point is, yes, ultimately you will have it, but I think that idea should be to have it really by 2020, as this is the plan, across EU, to have the real then internal market, especially if we are talking about some sort of the applications, like for example, connected or autonomous vehicles, just as one example. All other examples is, like Tony mentioned, and the point is that all these great things, Internet of Things, all these applications, health, finance, and so on, simply falls down off the cliff if you don't have the basic prerequisite, and that's connectivity. And not only connectivity, but reliable connectivity across the border. And this is what I think it's really key to get. And basically, the proposal of the Commission was in a great direction. I hope that the member states will actually take it and then, have some sort of the courage to forget for the moment there, I would say, a bit sometimes selfish interest and really do something which is good for the internal market. Other 2 points which I think are very important and ongoing for the lot of entrepreneurs, big or small, it doesn't matter, is basically what's happening with the privacy regulations, the implementation of the general data protection regulation, network information security, basically cybersecurity rules, and now upcoming e-privacy rules. I don't want to bother you with the details because some of this is very technical, but the point is that it can become very difficult for the smaller companies. Even bigger companies are struggling, and it will be a big question for the big systems whether they will be able to implement it on time, not to mention for the smaller companies. And again, we are facing the risk of possible fragmentation in implementation. So basically, again, we see in two, I would say, examples, and I will give the third example and close with this, is that the great idea, digital single market, to make a bit of a progress, to make things right, actually are pretty much ending in a bit of a different direction, which I think is worrying. And I think that now Commission in the last 2 years should really give a final push to do it right and overcome the resistance of the member states and really implement it. Otherwise, it will not be fit for the purpose. Third actual example, which we see, and I think it will be also very difficult for the many, especially startups, is basically copyright rules. They're always controversial, and of course, there are two very entrenched views there everywhere, I would say, in the world. But the thing is that what we see now on the table is it will be very difficult for a lot of smaller companies to actually basically control and filter the content on web. For example, if they're doing data analytics, and then basically checking is this a copyrighted content or not, and then get proper basically approvals to use or not to use this content. I would say at least what I heard from SMEs, and I met them on Tuesday, and they presented actually to the representative of the member states. Actually, it seems pretty impossible. So I think that we really have to be careful when we are designing all these rules, even with the good intentions, that we really don't end up actually in completely opposite direction.
What is the digital single market about? I think we've forgotten. At the end game, what is the end game of the digital single market? Why are we all here gathered here and in Brussels, all over Europe, obsessing about it, spending every waking hour lobbying about it? It's not about consumer rights. It's not about better business processes. It's not about harmonization. It's not about fragmentation. It's about more jobs in the tech sector. That's the end game. And I think it's very easy for all of us, myself included, to get caught up in our ivory towers, worried about like one specific piece of legislation without joining the dots together. So I spend my time working on the app economy issues through my job at King, and then thinking about how we can help startups, rather scale-ups, to continue to scale and grow and create more jobs through the European Tech Alliance. And I think what we're seeing now, there's a lot of really good, like, helpful reports that actually a lot of VCs in Europe are publishing. We're seeing a lot more seed and Series A stages of funding happening in Europe, more so than ever before. We're seeing the potential for more late-stage funding. We're seeing year-on-year growth in the size of of closing funds for VCs. This is all really good stuff. It's the bit in the middle that's missing. It's the scale. So I think from 2007 to 13, Atomico, which is a European VC, they publish a report every year, which I encourage everyone to read, The State of European Tech. They basically said that, going past Series A, the amount of companies doing that have massively decreased. And this is a trend that we're seeing. Why is that? And are the actions that we're seeing, the proposals we're seeing through the digital single market, are they actually addressing that fact? Because it's that bit of scale, that's where new jobs are created, and that's how we create a proper functioning digital single economy. Damir, you touched just there on the e-privacy regulation. It's another huge sanction-filled piece of regulation that's got a lot of important bits in it, right? Don't get me wrong, but we're looking at the big picture here. The General Data Protection Regulation needs to be implemented by May 2018. Companies are investing significant time, people, and financial resources in getting that right because it's coming and we want to make sure we're as compliant as possible. And it's not easy to do, no matter how well-intentioned you are. At the same time, the Commission is telling us, possibly, ideally, by the same time, the e-privacy regulation will be agreed and we'll have to implement it at the very same time. I have no words. We need to have a really grown-up conversation with ourselves. And look, I maybe perhaps spend too much time in Brussels lobbying these issues, but we need to be much more honest. I was really disappointed with the midterm review. We weren't harsh enough on ourselves. We want to get this right. Europe could be the blueprint for, tech public policy in the future, how we treat data. We could be the gold standard as the Commission wants, but I think we're failing ourselves. Tech policy isn't being decided in the US, it's not being decided in Asia, it is being decided in Europe. And no other region in the world is having this scale of overhaul of digital laws and policies. So there's a lot at stake. There's a lot of jobs at stake. And I don't think we are being honest enough with ourselves about if we're on the right track or not.
Julie, sure.
If I can just address that, because I thought it was really interesting what you said there. I think in every era, has anybody in the audience read any Carlota Perez? Carla? Yeah. Okay, I thought so. So what Carlota Perez did is she very helpfully looked at the past 300 years. And if you're interested in disruption, I really encourage you to read her Theory of Disruptive Technology and Adoption. She's a Venezuelan economist. And what she has done, it's helpful because we don't actually need to be the smartest person in the universe. We just need to study history. Essentially, the same thing happens again and again. Every 60 to 80 years, we move from disruptive tech through derivative tech through a financial crisis to the empire strikes back. And so what that means is that part of why fewer companies are getting to scale is that venture capital and the whole VC-backed startup scene is not becoming outsourced corporate R&D, but it's getting closer. And so companies are getting acquired for their strategic value. It has huge implications on how much capital goes into those startups because it's not just going to be 25 companies in Palo Alto that are going to acquire all these companies. It's going to be the large Goliaths in each ecosystem. And so we have to be honest about what the opportunity is for Europe. I don't think it's so much an opportunity to lead because I think in every era, there is a playbook. We call that playbook ecosystem economics because we think it's the companies that are organizing the economics of the ecosystem. But regardless, it did start in Silicon Valley. But that doesn't mean they own it. We need to interpret it in Europe, and there's ways that Europe can win. It's by understanding the specific investment opportunity here, and that's to enable and extend. Europe thinks like an eldest child. It doesn't, of course there's disruptive entrepreneurs here, but it doesn't want to blow up the estate. It wants to enable and extend that. That actually means that the opportunity is more capital efficient for venture capitalists. We can make a better return. And on the data side, you're right, we're going after that, and what we should do is use the regulatory and legal frameworks to establish data as a financial asset of the individual. And so instead of, it's a carrot approach instead of a stick approach. It says, if you want access to 508 million people, they own their data. You're going to have to figure out how to incentivize them at the unit economics level. Simple, establish property rights for individual data, regulate it, and create a legal framework so that it's a financial asset of the individual. Now, I think we all probably in this room recognize that there'd be hundreds, if not thousands of entrepreneurs. We're working with a couple who can establish a digital technology application to make that a reality, right? And that's the way then to get talked about in the boardrooms of Google and the rest of it, is to create an alternative solar system where you introduce, today data is not legally present in the digital transaction. So if we all wanted to do a class action lawsuit against Google and say we demand the value of our data, which is on the balance sheet of Facebook, Google, et cetera, the head of legal at Google would say, tough, you're not legally present in the transaction. So we do have to regulate and create the financial asset. That's how we create a personal economy for everybody here, and that's how we can create the economics of different ecosystems in Europe. It's an interpretation of the digital playbook, and I absolutely believe that Europe can win. I think it's not about leading, it's about recognizing that just because most Europeans look like most Americans and vice versa, we're extremely different in the way that we operate.
If we're so different than the US and maybe some other areas, is the EU really the land of digital opportunities that's coming up, or are we just following what's happening in the Silicon Valley already like years ago? Are we just moving behind that? What do you guys think?
I don't want to hog, as I'm conscious that everyone here wants to talk, but I will make a small point.
Sure.
Silicon Valley was a result of very good government policy. They invested. They invested a lot of money, and then they let the entrepreneurs and the companies do their thing. We're starting to do that in Europe, so we need time, and these things are very cyclical. So I think we've got the idea. It'll take time, and it's not about winning, but I do think there is a lot that Europe can get right because of the opportunity, because of the massive legislative framework around the DSM. There's a lot we can do. I would thoroughly disagree on the point of data ownership, though, because I believe like data is like information. It's so varied. There's lots of investments made into it. It's so hard to put as a currency, and I think putting that into law could be something that I think would really hurt a lot of smaller companies. So I'm happy to chat with you about that afterwards. But I think we're not so different. It's time, it's cyclical. I don't think we should worry so much about our differences rather than what we have in common, which is the internet, which is global.
Just to add one point, which I think goes back to both what Julie and Linda was saying, and that's also about data flows, because we know that there are certain, let's say, localization policies in Europe based on certain, let's say, rules like accounting rules, tax rules, and so on, or for the health records, which basically keeps this data within basically geographical areas. I think that in Europe, we also need to start think a bit beyond borders and not to consider other member states as some sort of the incompetent or as the countries that simply shouldn't be trusted in a way, because I think that if we are talking about internal market, it's not just that you can come and sell from one country to the other and then this country is good when you can sell your product, but for everything else it's not. I think that we need to start think a bit beyond borders and beyond physical and start to also treat data in that way like we are treating basically goods, which means the data, which is by definition basically much more borderless than any physical good. Then I think that Europe should start think actually in that way and start treating it that it can be stored anywhere, of course, provided that all the rules are complied with, like privacy, cybersecurity, and so on. but really use this and start to utilize this, because all these nice concepts that we are discussing, if we just keep it localized, I don't think how all this will fly.
If we now ask the smaller guys in the round here, so I'm considering Jonas on the one hand, but also Alex, you have to do a lot with your accelerator work with smaller startups. What are the challenges that most of the smaller companies occur in the first 1, 2, 3 years that we need to find a solution for, that hinder them to become a scale-up? And maybe that's also a question for you, because I mean, you guys are already, since 2009 you have been on the market, but it is also something that you did the whole process.
Well, I think some of the common challenges for the smaller companies such as us down here. One benefit has been mobility, being able to actually come down here and start up a company. But also then running into problems with being able to recruit in, especially if recruitment from outside of the EU. And then also mobility of those skilled people, especially on the technology side, where somebody may have a visa from outside. They're based here. As so often happens, it's a startup, it doesn't go anywhere, so they want to continue, and by that time they're integrated in the ecosystem locally, but are forced to leave, and are not able to quickly enough change their visa status to be able to stay. And so there are kind of small incremental issues like that actually have a big impact for us, in the space that we're in, or companies like our own small game studios, that are just waiting to be able to bring people in and then start to scale properly. So that is an important factor. And so there are these smaller concerns that a bigger company is able to deal with more effectively, more efficiently.
Or they just throw money at it.
Yes, there is that. And I mean, case in point, my H-1B visa, when I came to Chicago in '95, I was actually the one who did the application. We were a small company. We were called Bungie Software at the time, and we were only 7 people. We couldn't afford the legal fees or anything, but in due course we did grow, and then I can afford it. But the only person in the office that could actually dedicate the time to get this processed was me. And I was lucky I had an F1 visa, so I could actually legally stay and do the application at the same time. Now, if you're going to do the same thing, the amount of paperwork and the amount of specialization and the amount of diligence you have to do in trying to ensure that nobody else in the entire country is being deprived of a job because you're coming in. And when you get to such heavy regulations, let us as entrepreneurs help and decide and find a skilled individual and bring them in and train them up and work with them and build a big, cool, strong company.
Yeah, if I may add to that, I think one of the biggest pain points that we are facing, and I'm pretty sure that other member states are facing the same situation, is that there really is. I mean, we talk a lot about digital single market, but the rules seem to be different between startups that are local, made up of co-founders that come from the same member country, as against when there are startups where the co-founders come from different member states. Not to mention when the co-founders come from beyond the EU. So the amount of documentation, translations even of utility bills and M&As that the banks tend to ask foreign co-founders is enormous. So the bottom line is that the rules are different for a startup that's local and a startup that's coming from another member state. So these are things which we really need to work very hard to resolve.
so my experience is in a Maltese startup, right? And we are 4 co-founders. It's true, the rules are different. So you mentioned within the from start to, within the 3-year period, right? I mean, what I can say from our experiences, and since we're all Maltese, right? I mean, you get used to the system, you know how the system works, right? I think it gets a bit easier. We do end up paying more taxes than those that come to Malta which are foreigners. So the rules are different there as well. But what I was going to say is, from our experience, the first 3 years weren't that tough, really, right? I mean, we're a bootstrap company. I mean, we put our own savings on the line, and we're also an online company. So I'm sure that every industry has its own challenges. For example, we're not fintech, right? We don't have really strong regulation. We're started off over the internet. What I can say, we also, by the way, feeling the pain of visas, right? Because now it's getting really, really tough to employ people in Malta, specifically in Malta, and to get people from outside of the EU. It's really a problem. It takes a 3 or 4 month process to get their working visa. But what I can say is this: when sometimes I speak to other people who are just starting a company or have an idea, what I notice that lacks here is either they're really risk averse, or maybe experience, right? We lack mentorship. I think if there's something which we need, at least in Malta, I'm not sure how it is in other countries, is an entity or a body, right? I mean, paid body, ideally maybe a public institution or by the government, which offers mentors in the terms of either subject matter experts or else entrepreneurs which had their experience, to those that would like to start a company, to start their own business, and which don't know yet how to execute properly. Because nowadays, I believe one thing: execution is key. You can have the best ideas, without execution, it's like you have nothing. So yes, I mean, within the first 3 years, we didn't really have many challenges. I mean, we're relatively lucky there, to be honest with you. So that's.
I'm amused, actually, because I've only been in Malta for a year, but I've lived in France for 7 years, 18 years in the UK. And honestly, I think the Maltese people are some of the most commercial people I've ever met. I mean, there's almost nothing they would do to not make money. And I mean that in the nicest possible way. And you have, I think, business mentors in some of the, and they're not so many, but many conglomerates, the private business families. The kind of shocking thing that I've kind of noticed, having gone to all sorts of kind of startup events, and then, is that these two communities don't cross-pollinate. So you've got, but we all know who the top 10 business families are in Malta. And then we know the startup, and they're not interacting. So you have natural business mentors in the top business families, and not just the top guy, but you have a whole series of mid-level or, senior management, and so forth, that could quite easily find, I think, the solutions to the future of their businesses, the digital revenues, the user engagement models, all of these answers to new consumer behaviors if they engaged with the startup and the entrepreneurial community. But they don't yet see, as I think most people in this room would, that the entrepreneurs have the answer. They don't look like it because they don't, swagger around because they're tired, because they're building their businesses. But the entrepreneurs see the future, and that the guys that are running the kind of stable traditional businesses with extremely good cash flows have to seek out those answers from the entrepreneurial community. So I don't think it's anything that the government needs to do. I think we almost need to force those two groups of people to respect what the other party brings, because they both need. No venture capitalist is going to give to a digital startup today huge amounts of money to go build a highway. They're going to either say, go get a deal done with an app store, again, Palo Alto, or they're going to say, go find yourself a highway, a customer acquisition route. And so what you have in Malta is this incredible test pilot group. You've got businesses that have all, existing customer bases. If those customer bases, from language schools to factories to everything, would open themselves up and become the highways for the digital cars, Malta could be one of the most important test beds on earth. Seriously.
Take a microphone, yeah. Jonas.
Yeah, I've been working with a couple of groups here locally. It would be great to have the ability to get these disparate groups to interact. Maybe they could meet, say, the first Tuesday every month, but never mind. But also helping out here on the island with the newly formed ICT Malta Foundation. It is something that, that as a group is trying to look at and address and help, and then also finding out there are a lot of disparate groups and that are spread out and trying to, within the video game sector, there's 5, 6 organizations that are trying to help and help each other, and also speak to government and other organizations, and it'd be great to try to focus that in a little bit, and actually just have them find each other as well. There's a lot that can be done with that. On just another point that was raised here, as a co-founder, having moved to Malta, there is unfortunately no tax advantage if you become resident, in that sense. But because it is something that is raised. Yeah. It does come up quite a lot, and especially when I speak to investors or charities and whatnot. There is a certain, that's why, and it's like, well, no, actually, we all live and work here. We all pay the same, in that regard.
Yeah, so that would be actually one of my next questions, is basically since we have now two very different groups of people here. On the one hand, we have a Google and a King, which I consider already very big. And on the other hand, we have very small companies. What can you guys do if you join forces? What are the options? And what are the ways to explore new opportunities once you guys work together? And that's not only for Malta specifically, that's all over Europe, right?
Especially peripheral areas. Yeah, I mean, especially peripheral areas of Europe, because Malta is, yes, Malta's in the middle of the Mediterranean, but really and truly it is on the periphery of Europe. Malta's not London, it is not Berlin, it's not Stockholm. So a lot of the solutions that could apply to Malta could apply to peripheral or less developed regions of Europe, especially bringing the model of an accelerator from areas like, Berlin, London, to less developed areas, and therefore that could translate into an opportunity for more economic growth and jobs in these areas. So.
Yeah, thank you for your question, and I would like just to put a couple of comments on this. Of course, Google started as a startup, as a search engine back in a garage in Silicon Valley, but nowadays we don't consider anymore, and we think that we are not anymore just a very successful search engine, but much more complex and complete company. And from this point of view, we really think that we are a growth engine, an engine of growth for all the people, the businesses, the creators, the entrepreneurs that work with us, that partner with us. And from this point of view, for instance, we think that there's a huge potential in Europe coming from the digital, but to secure and make the most of this potential, seize this opportunity, there's a need from the European ecosystem to be ready and to actually have the right skill set to actually capture this opportunity. That's why there are several reports that shows that, for instance, in 2020 there will be something like 800,000 jobs that will be unfilled because there are because there's not out there enough people that have the correct digital skill set to actually cover this job. So from this point of view, that's one of the areas in which we are working, and starting from the fact that we are truly it's really something that characterizes our day-to-day work, working and collaborating with artists. That's why, for instance, we created a program that is called Growth Engine, with which we we elaborated trainings for entrepreneurs and trainings for SMBs, and we try to actually do that cross-pollination that was mentioned before. So trying to allow small and medium enterprises to understand the opportunities that they can find if they dedicate more attention to digital. And this project actually is a project that we are, of course, exploiting, and we are putting forward in many countries in Europe, big countries, but also smaller countries. And for instance, we did the same here in Malta a few months ago. We launched this project, this digital workshop project, partnering together with the government in order to creating these online courses in order to share with the ecosystem more and more these skills. I think that there's a lot of potential of collaboration, and I agree that Malta is for sure a great best practice from this point of view that can be seen as an example from many countries.
We also, I suppose, have a bit of a responsibility as well, and this is coming from, I suppose, the formation of new laws. One of the reasons we started the European Tech Alliance was we felt that policymakers didn't have enough of an awareness and understanding of the companies that are emerging throughout Europe and the different ways we're collecting and processing data, the different business models we're developing. So when they were legislating, they were, I suppose, thinking about the dominant companies at the time, but hopefully a lot of the companies emerging will be the big companies of tomorrow, or, you know, we'd be very happy to be the medium-sized companies of tomorrow. So I suppose we have to, as business, and this is the problem, when you're growing and scaling a business, you're worried about the bottom line, you're worried about making sure you can employ more people. You don't really think, I've got to send someone to Brussels and take part in a consultation. That really doesn't come into business planning. But 5 years down the line, that actually could affect us very much. So being able to combine our resources, not every small to medium-sized tech company is going to have a public policy team or a consultant. You'll start with your lawyers, and then you'll think about policy after that. That's usually the path that goes. So how can we combine resources as a business community? There are some great, in different kind of territories around Europe, there's some really good different groups that do that kind of help companies like with the resources they don't have, make them aware of legislation, whether it's on visas for workers, things like VAT, really practical but very, very important. So there's definitely things happening, but we have a responsibility, and I think the bigger companies as well, you know, need to be more of a focal point to bring medium-sized and smaller companies together to kind of, I suppose, make our investment in the political debate. Again, it's not always top of your business plan, but in tech, the way things change so fast, and we were speaking earlier on about regulation sometimes lagging behind the technology, then I suppose that's the reality of the world that we're working in.
Answering your question, Benjamin, I think that we should foster clearly much the collaboration between the startups and the big companies, no? Because if I hear some comments from the colleagues in the panel, coming more from the startup side, I hear problems in getting visa, that's fully right and correct, problems in bureaucracy, problems in raising funds. When I look at the big companies, this usually is not a problem. They have organizations or that are somehow machines to solve these problems, and they are used to move people from one country to another. They have funds or banks where they can raise the capital, and they are used. But on the other side, when I look at the big companies, what they lack clearly is this, let's say, sort of innovation that is disruptive. Because if I look at our case, we are a more than 150 years old company. Of course that we innovate, because most probably otherwise we will not be here after 150 years, but we clearly miss this disruptive innovation. And in order to get this, and you are not able to follow all the innovations that are happening today. And in order to cope with this, or try to cope with this, we have a collaboration with the universities in Milan, with the Istituto Politecnico di Milano, where we try to force, well, let's say, some sort of brainstorming of ideas, and from there, we collaborate with certain startups to develop solutions and technologies for the company.
Yeah, I think that's really a good way. Accelerators on the one hand that are publicly funded and that help foster a bandwidth of different mentors that are out there that help younger companies. And that's specifically when young guys that come out of their university and have no clue what they're doing there, but they need somebody to tell them how they can execute on the business in the end. And then on the other hand, the bigger corporations that open up, and we had that in the panel before as well, that open up their infrastructure and their network and give power to smaller guys and put somebody on their side saying, well, okay, let's try it. And I give you all the experience that we have already in our company. Yeah, very important. One more topic we might want to discuss, and that's also something that was part of the midterm review, is access to funding. Again, something that's more a problem for smaller companies. And maybe, Julie, that's something that you might want to touch on at first.
Thanks. Well, I think the good news is there's a lot of money in Europe, isn't it? Right? So that's one piece of good news. The second piece of good news is that people recognize that European technology entrepreneurs are hitting it out of the ballpark. So there's no feeling that somehow that there's, oh my God, we have to, back these poor entrepreneurs that can't figure out how to make money or build global leading firms, right? So those two pieces of good news, lots of money and lots of great entrepreneurs. It's really just the bridge in terms of bringing those two things to happen. So what I did is I looked at, well, how does this happen in other industries, right? And if you go talk to a pensions fund and you say that you look at how they construct their businesses and so forth, they invest in multi-manager products. So they're basically disaggregating the value chains, for example, being a venture capitalist, from raising the money to investing the money to hiring risk and compliance people to developing the portfolios to selling the companies. There's a lot of different jobs. And in every industry, platforms are coming to those industries, right? Uber, Airbnb, and so forth. So it's inevitable that platforms would come to venture capital, inevitable. So whereas there's really great developments like crowdfunding on one level, and eventually that will go pan-European, I think the more systematic or significant change that could happen is to pull this cottage industry of venture capital into something which is structured as a proper asset management industry, whereby, I don't know who the best entrepreneurs in Stavanger, Norway are, but I tell you, I know the guys that know who they are. And if I can get those fund managers, those portfolio managers to plug into my platform and keep them focused on finding the best entrepreneurs in Stavanger, Norway, doing energy tech deals, and take all of this stuff away from them, which were not the reasons why they wanted to become a venture capitalist, then guess what? We fund more energy tech entrepreneurs in Stavanger, Norway, for example, right? So I think that in every industry, people's platforms do is they enable different people to do certain roles and responsibilities. And the good news is that's coming to venture capital in Europe, and that will have a huge effect on the scale and the tsunami of capital that will actually able to be deployed into this asset class, into the alternative asset class of venture capital. That, to me, is the biggest structural thing that we could affect in terms of getting capital into the hands of deserving entrepreneurs in Europe.
Does anybody else want to contribute there? Has an opinion? Was it so easy for you guys to find your capital?
Well, access to capital is a major issue. And it is very costly to go after it. Even just that. And the very large sort of outlier successes paint a very rosy picture to the unaware that it seems easy, but no, it definitely isn't. But facilitating access facilitating access is something I hope becomes a serious focus, even more so than it obviously already is.
From capital distribution over to bureaucracy, I have a very good story that I actually had in one of my games companies that I started. In 2013, we were granted a public grant from the EFRE fund, and it was about 600,000 euros that we should get for creating jobs. And we ended up not taking the money from the European Union because they wanted us to sign a personal liability on the 600,000 euros if we could not keep those jobs for a certain period of time, even though we tried to argument that if economy goes down and I can't do anything, it's not my fault, right? I'm already investing 1.5 million of my own money into that company. Why would I then take another? Basically, it's like giving you the money back if it's not my fault, if it's somebody else's. So, and it was very much involved with writing hundreds of pages in terms of application forms, and then getting the money from a public institution was really tricky. So how are you guys dealing with bureaucracy? Is it a problem for you? And I assume that for the smaller ones, it's harder to deal with, and for the bigger ones, they build a machinery to deal with it.
Yeah. Well, sorry.
Go ahead.
I'll do, because of one thing that you did say, because we went through an experience like that about a year or so ago, where we were fortunate enough to win a placing and be given the opportunity for a grant. But this is where, if it's the public side or the private side of the equation, you run very quickly into where legislation or contracts lag behind, where it's essentially what comes across as a manufacturing contract, and also giving away a permanent license to your technology in order to be provided with this funding, and where also certain liability issues. And it's well, this is normally something that is given to more artistic endeavors. And yes, we're a technology company, or we're artistic in a sense with some of the products that we do, but that really sort of, well, we had to say no.
Yeah.
Obviously, we couldn't sign an agreement where we gave away all of those rights, and that's a real shame when the mechanism is there. But also for us, the sunk cost of 2 people for 2 weeks dedicated to filling out forms and generating new artwork and those kind of elements, that is a massive cost when you're a small company. Because it's a large percentage of your hours are then dedicated to that.
We had actually, about 3 years ago, a very, very similar situation where we were awarded a grant, but we found out that for us to end up getting the grant, right, I mean, every software developer had to write hourly or daily log of what actually he has to do, right? And then you have to start saying, what is the opportunity cost of this project, right? I mean, should we get, these software developers, instead of developing, actually filling all these forms. Apart from that, it was also a project that it would be a 1 year or 1.5 year project that you have to stick 100% to it. But the reality is the industry, the market moves, right? And the market can move like that. So sometimes you have to maybe adjust a bit. And for that reason, we decided, it's not worth the opportunity cost, and we didn't go for it either as well. Same, it was the bureaucracy in it, which to a certain extent you understand it, but maybe there has to be a balance somewhere.
I think that one of the issues is that in all good intentions that, for example, Commission has with the public funding is that, and of course, like you also, David, mentioned this, it is important to make sure that the publicly invested money is properly invested and that there are some sort of mechanisms of control. The thing is that I think it also comes from the logic that the main amounts of money that Commission is, in a way, redistributing is to the member states, meaning to the governments, and then governments are, through the national projects, moving it further. But the point is that one logic applies there because you have some sort of intergovernmental to governmental relation, and that, of course, that you need also to give to keep these governments accountable, because this is also public money to public money, and that's okay. I think that the other thing is, of course, that then in all this transaction, this, I would say, commercial aspect and actually market aspect is totally forgotten, both with IP rights. It's a big issue because you have a clauses for example, Commission-funded R&D projects, which says that basically you should give your IP rights to the basically to this project, which is very hard for the private companies that are participating in the publicly funded projects or public-private partnerships. And then you have, from year on year, kind of, that the private participation is getting actually down. It's getting down partly because of the bureaucracy, because at the end of the day, it's simply getting too slow the moment when you actually get this money, having in mind what time you need to invest to actually get to the point to even start receiving something. And second is, of course, these IP rights. And I think that this is a shame because these public-private partnerships are actually the way forward, and this is one of the way how some issues with the financing could also be, in a way, helped. I'm not say solved, but this could be one also of the mechanism how to do it. All the large scale, small scale, middle scale, it doesn't matter. But I think that we need to kind of overcome also the mentality issue that we have. First, like I was mentioning, with the borders, and then second, with the thing that, yes, okay to protect how public money is, let's say, invested, but in a way that you allow then people actually to use it and to really make best out of it, because that's the best use of it, not, you know, filling the sheets.
Yeah. Alex?
If I may add now from the government side, it's really not easy to approach government or you know, top managers in government and say, look, we need to invest in startups that notoriously would fail by the second year. You know, 90% of them would fail. So what we did, and we think that, you know, it's working pretty well, is that we factored in this on day one, and we said we are going to be tolerant to failure. I mean, we like to talk about, or we admire the American model, which is, you know, which is basically the philosophy based on it's okay to fail. But then, you know, applying it, you know, is not that easy. But I think that what we did is, I think, a good model which could be replicated in other peripheral regions. I have to say, though, that it's been quite a challenge. What I can say as well is that the mindset in middle management in all governments has to change. It really has to change. Somebody yesterday, I think it was Infosys, mentioned design thinking, and I think it's exactly that. It's taking a customer-centric approach, which I believe governments are not doing. And it's very hard because bureaucracy, by the way, is really an operating system that organizations have. It's been with us for the past 100 years. So it's not easy to move out of that mindset. But I think that the good thing about startups is that they are disruptive. So they're also disruptive to government. So basically, if we don't get our act right, you know, we may soon find ourselves, you know, in you know, pretty stormy waters. So
that's true, yeah. And there are actually a few startups out there that try to reduce bureaucracy. They try to go to governments and offer them gamified approaches to reduce the work for the customer, which is the guy who actually would apply for a grant or something, and reduce the work for the person that actually works at the authority in that case.
And open data, by the way, is a good way.
Yeah. Okay, so I think we are almost at the end. Are there any questions in the audience? Yes, there we go. Can we give the gentleman a microphone?
Hello, I'm Younes from the Luxembourg Innovation Agency. I have a question to the whole panel. What do you think about this concept of European Innovation Council proposed by Commissioner Moedas, which is now in a preparatory phase being planned for 2018-2020? And we don't know what it will be exactly in 2021. So what are your thoughts? Do you think it's too late regarding the timing? What do you think this one-stop shop for entrepreneurs should be with all the inputs you gave with talents? We talked about the talents being stolen from Europe, so maybe we need some schemes to attract talents, to keep talents. So what are your thoughts on this European Innovation Council? Thank you.
I think this is a great question, and also to mention that Commissioner Moedas did something which is also very commendable, and this is the establishment of the European Funds of Funds, so-called Funds of Funds, which is a great thing. I think that both initiatives are great. I would say it's never too late, and I think it's great to have such an open-minded commissioner who actually started really to change and kind of challenge from inside the models of working. Not that they were bad, they were good for certain periods of time, but now, you know, things changes, markets are getting faster and faster, other regions are getting, you know, ahead. So I would say that these are the great initiatives. Of course, like you said, we will need to see how it will be delivered. But I think it's a good start, and one of the good things with initiatives of the Commission is that usually once it started, it's not always easy to change. But if it is good, it's good to stay, you know, and then to develop in a different mandate. But I would say that the Commission now has 2 years to basically deliver, I would say, on overall DSM strategy, and then also on other initiatives like this one. And I think that we need to kind of keep the positive mindset and try to really work with them and help them to actually deliver, rather than just say, well, you know, that's an initiative, let's see. Yeah, sure, we can wait until 2021 and see, but I would rather, you know, come to the Commission and say, hey, how we can help, right?
Anybody else?
So I don't know much about the planned detail, but I would welcome anything that brings, you know, experience and clever minds together. I would say the focus needs to be on delivery and run it like a business, and, you know, have, you know, targets, and if you don't meet them, you know, be honest about why. I think that's what we need, and, you know, that would be very, very welcome.
Okay. A second question would be over here. All the way in the front. Yes.
Thank you. So we talked about good things like mobility, and we talked about access to capital and bureaucracy, etc. One thing that we didn't mention is intellectual property protection, development, etc. And the gentleman here was talking about collaborating with universities, and my understanding is that there is some piece of legislation in place where joint projects that are between private companies and universities, that the universities have to basically say they have to own the intellectual property that arises out of any of those kind of cooperative projects, and that's been, in Ireland at least, a big stumbling block for enterprise engaging with academia. And I agree that that's probably a great way to bring innovative ideas to play into firms, but that there is this sort of legislative stumbling block that seems to crop up again and again. Can anyone comment on that?
Can I say something really quickly? I would hope that we could be driven by a very simple principle, which is, in 2 words, clear economics. When economics are clear for people to act, they do. It's amazing, right? So if you get into an Uber car, you sit down, the driver knows what he's going to earn, perhaps as a percentage of a transaction, but the individual, the passenger, is not going to be surprised by a £2,000 bill. The economics of that transaction are clear. And so that's what I'm trying to do with venture capital. I'm trying to make the roles and the responsibilities clear, and then the economics so that everybody understands what to do and what's expected of them and so forth. So in any situation, like IP, you have to say, are there clear economics which incentivize people's behavior? And if we want, you know, corporates to embrace and adopt, and they're getting none of the upside, why in the world would they, right? And I think it's just a very simple message that we can apply to almost any discussion that we're having about what we're trying to do to drive wealth creation, job creation, innovation, all of the positive things. The design of the digital era is baked. It's out there. We cannot change it. We can only interpret it for Europe. In the interpretation of it for Europe, we need to make sure that the economics are clear for IP holders, for venture capitalists, for entrepreneurs, and so forth. And the really lovely thing that Malta offers is just a unique opportunity to reduce costs, to drive the overall profit of unit economics, so then when you prove it in a test bed like Malta, you can roll it out across the world. The operating model, that's what test bedding means, is the operating model can be done at a lower but sustainable profit level in Malta that can then be rolled out, and Malta can then set the standard for how efficiently these digital transactions can work. That's what we should be going, because if we do that, so many things will follow. People will follow Malta's lead.
I think that this is one of the issues that I also mentioned briefly when I was saying that the issue of basically IP rights and why basically participation of the industry in many publicly funded projects, especially by the EU, is actually getting lower and lower. That's one of the main reasons. And the thing is, the logic behind this was, and this is actually not coming specifically for some, as far as I know from the regulations, it's more like from the basically grant agreements. The thing is that the logic is that, of course, since this is a public money, it should be some sort of the public ownership, let's put it like this, meaning that public should be able to access it. One other issue is also the results of the research, meaning availability of the results of research, which sometimes are very difficult and sensitive for the companies just to be totally 100% public, at least at once. And that's not necessarily open data issue. It's supposed to be kind of branded with that, but I would say that there are serious IP issues there. And I think that, again, like I was saying, is we need to make a decision that it's okay to protect how public money is invested, but the key word is it's invested, which means that there needs to be some profit out of it. And this profit needs to be for the businesses, for the economy, for the society, and for the citizens. And the thing is that if this is not somehow, like you, Julie, mentioned, I mean, if this is not, this economics, it doesn't work, it will not work at all. And then the point is, why are we then making these investments in this project if this simply cannot be utilized? The point is to utilize it and to bring it to the market. In many occasions, what you have is that you have this money, it's invested, researchers are keeping their jobs, and then basically it's more for keeping their jobs and to running, like we can say, okay, we have a project, we publish the works, instead of having some results. And I think that we need to change this logic. Then this issue will be somehow solved, along the lines on this, because the logic is then if you need to implement it, someone needs to, implement this IP.
Okay. So, do we have one more question? Otherwise, I would say thank you for being here, and thank you for having us. And we're good to go. Enjoy the rest of the evening, and enjoy Friday, I would say. Have a drink.